Hi traders, welcome to our pre-weekly review of November 9th. We're looking at the US dollar at the moment. Obviously, it has reached even further highs during last week's market, and we're going to have a look a bit along those sides of things in this week's review. Briefly, guys, in a nutshell, last week's market we saw US unemployment down at the end of the week. The dollar basically reached highs that it hasn't seen since 2009 on the dollar index, so strength for the dollar. The euro continued to fall, which was rather shocking as the ECB came out in the middle of the week and basically reaffirmed its commitment to stimulus. There wasn't much more information really giving us too much insight beyond that. And last but not least, the Aussie Dollar also broke a very firm support level after a while that it's been ranging obviously in this band that we're going to come and see in this week's charts. That was mainly after the interest rates decision in Australia. Not much movement there. So without further ado, guys, let's look at the technicals that we're focusing on. We mentioned the euro dollar drop last week. This is the bigger picture on the euro dollar there. You can see I've circled the RSI, relative strength index. It's heading towards the oversold level of 30, so you might expect that sometime in the next 100 pips or so, this pair could be running pretty thin. We're at 124.50 at the moment. 122.50 seems to be the all-time support, so that's 200 pips away. But if it follows a trend line channel, then if you think about it, we might actually not see this base support, but rather a diagonal support that I've just drawn now on this lower arrow. And that would mean that we are basically right about around the time where we should see this pair rebounding. So keep a very close eye on this euro dollar. Perhaps all the hype about it being oversold and oversold to lower and lower levels is all just hype, and we might really see some reversals taking place soon, especially perhaps in the new year. So without further ado, we've moved on now to the Australian dollar. We mentioned that last week during the interest rates, this pair crashed. Basically, initially this pair was ranging between 88.50 and 86.50. I've just drawn you that range there on the red lines. You can see here on this daily chart, and there it is with the arrows. And last week, just 3 days ago, basically towards the end, we saw a breakdown from 86.50 down towards 85.25. So that's interesting. We're seeing a reversal now, retesting bang on the previous support line. You often see that, for those of you who know, when supports are broken, they can be retested and then form a resistance. And now it's going to be interesting to see if this pair is actually following in the monthly chart, which is a channel. Okay, so it's a bearish channel, and here you can see it there. And there is a small chance that the distance between the buying and the selling is starting to get thinner and thinner. So what you want to do, guys, is see that this pair doesn't start to bounce off this bearish channel's support line just round about 85 mark. So there it is. There is a possibility that it could start to range back up towards the 89 levels. You can see it here much more clearly. There's the channel. So there is a possibility that this pair could break towards 0.80 in the long run. But if we see that it follows a tighter channel where the buying and selling gaps are getting shorter and shorter, then maybe round about 85 would be the maximum extent for this before a bullish reversal. Let's move over now to a very interesting pair. It's an exotic pair. We're mixing the GBP with the New Zealand dollar. That's because we have inflation reports out this week in the UK, and also on Tuesday we have business reporting out from New Zealand. So we decided to put those two pairs together because we think that's where most of the moves are going to come this week, given the fundamentals. Okay, we can see a false breakout there on the monthly. That was in April 2013, and since then the pound has been stronger than the New Zealand dollar, but it has reached a resistance level, and that resistance level we can see here has recently been tested quite a few times. You can see here from the resistance round about 2.0 marks. That's 2.08 to be much more specific, sorry, as shown reversal spikes that I've just circled outside the Bollinger Bands. And you saw that on the left hand side also, with the spikes and candles outside the Bollinger Bands before they reversed. So we're in a reversal mode at the moment, and if we see this diagonal trend line that I've drawn you here broken, then you can expect a lot more selling here, at least to the lower Bollinger Band, around about the 2.033 level. Okay, so that's the pound New Zealand dollar, guys. It's this week. It's a trade that's going to be focused anywhere from Tuesday, Wednesday and Thursday, so expect possibilities there for more shorting on that pair. Before we leave you, the major news this week is indeed coming out around about this middle of the week, but we do have on Tuesday Australian business confidence, the New Zealand financial stability report that I mentioned, Wednesday all the UK data on unemployment claims and inflation, Thursday's unemployment claims in the US, and then Friday a series of Euro GDP numbers from France and Germany and the dollar consumer sentiment. So have a great week, guys, and trade safe.